Hey everyone, welcome back to Corporate Decoder, the place where we uncover the real story behind the numbers. And let me tell you, Quoin Pharmaceuticals has got a story to tell, and it involves some serious financial maneuvering and a bit of a Nasdaq tightrope walk. Before we dive deep, if you like getting the real scoop on companies straight from their official reports, make sure you're subscribed. Also, we've got a fantastic community over on Discord where we break down these filings even further, so join us there, link in the description. Alright, let's break down Quoin Pharmaceuticals' latest quarterly report for the period ending June 30, 2025. This is essentially their check-in with the world after another 3 months of operating their biotech business. First up, the balance sheet. Think of this as a snapshot of what the company owns, what it owes, and what's left over for the owners at a specific point in time. As of June 30, 2025, Quoin had about $8.4 million in current assets. That's stuff they can easily turn into cash within a year, like cash itself and short-term investments. That's down from over $14 million at the end of 2024, a pretty significant drop. Their total assets also went down to around $8.9 million from over $15 million. Now, let's look at the other side of the coin, their liabilities and equity. They owe at $6.3 million in total liabilities, which is slightly down from the end of last year. But here's the kicker. Their shareholders' equity, which is basically what the owners have left after all debts are paid, took a huge dive. It's down to about $2.5 million from over $92 million at the end of 2024. This big change is mostly because of the net loss they've incurred. Now onto the operations statement, which shows their performance over a period. For the 3 months ending June 30, 2025, Quoin reported a net loss of about $3.7 million. That's a big jump from a loss of nearly $2 million in the same period last year. And looking at the first 6 months of 2025, their net loss climbed to a staggering $7.5 million compared to a $4.3 million loss for the same period in 2020. In the same period last year, and looking at the first 6 months of 2025, their net loss climbed to a staggering $7.5 million compared to a staggering $7.5 million compared to a $4.3 million same period last year. Looking at the first 6 months of 2025, their net loss climbed to a staggering $7.5 million compared to a $4.3 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 million compared to 6 months of 2025. Their net loss climbed to a staggering $7.5 million compared to $4.3 million compared to their general and administrative expenses, which cover things like salaries and office costs, went up by about 12.5% for the quarter, mainly due to more consulting, marketing, and legal fees. But the big story is in research and development. These expenses more than tripled in the quarter, going from around $588,000 to over $2 million. That's a massive 48% increase. For the first 6 months, R&D expenses also nearly tripled, jumping from about $1.5 million to $4.4 million. This shows they are heavily investing in developing their drug candidates, particularly QRX03. They've also got stock-based compensation, which is like paying certain employees or contractors with company stock. This cost rose a bit in the quarter and the first half of the year, adding to their overall expenses. Now let's look at cash flow. This tells us how cash is moving in and out of the company. For the first 6 months of 2025, Quoin used about $6.3 million in cash for its operations. That's significantly more than the $3-4 million used in the same period last year. This is directly linked to that much larger net loss we just saw. On the investing front, things are interesting. In the first half of 2025, they brought in about $4.5 million from selling investments, mostly US Treasury bills and notes. This is a nice inflow compared to the previous year when they used about $1.3 million for investments, likely using cash from a previous fundraising. Financing activities show how they raise money. In the first half of 2025, they actually used cash about $227,000 after receiving some money from warrants being exercised and paying back some money owed to officers. This is a big change from the first half of 2024 when they brought in over $5 million, largely from a public offering. Putting it all together, their cash balance at the end of June 2025 was about $1.7 million, which is down from $3.6 million at the end of 2024. This drop in cash combined with those increasing losses is a critical point we'll come back to. So what exactly is Quoin Pharmaceuticals doing? They are a specialty pharmaceutical company focused on developing treatments for rare and orphan diseases. Their main drug candidate, QRX03, is being tested for Netherton syndrome, a very rare genetic condition. They're also looking into other diseases and have research agreements for potential new treatments. Importantly, they haven't commercialized any products yet, meaning they aren't making any money from sales. This section really highlights the challenges Quoin faces. They've been losing money consistently since they started and have a big accumulated deficit. That's basically all the past losses added up, of about $62.7 million, with only about $1.7 million in cash and equivalents at the end of June, plus $6.1 million in investments. Management itself admits there's a significant doubt about whether they can keep going for at least another year without raising more money. They're actively looking for more funding through selling stock, debt, or partnerships, but there's no guarantee they'll get it on good terms or at all. There's also this whole Nasdaq listing issue. Back in April 2024, they got a notice because their stock price dipped below $1 for too long. They had a deadline to fix it, and they did it by changing the ADS ratio, essentially doing a 1-for-35 reverse split. This bumped their stock price up over the dollar mark, and for now, they're back in compliance. However, the report warns that if 26, they won't get an automatic extension period if they need to do another reverse split. This is a constant pressure point for them, as delisting would seriously hurt their ability to trade and raise money. This note touches on how they value their investments, primarily US Treasury bills and notes. As of June 30, 2025, these investments were worth about $6.1 million. The good news is they're classified as level 1 assets, meaning their value is based on readily available quoted prices in active markets. So their value is pretty straightforward. Here we see the details of their equity incentive plans. They've granted stock options to their employees and directors. As of June 30, 2025, there were quite a few options outstanding, over 180,000 as measured in ADSs. The fair value of these options is calculated using complex models, and the company is recognizing this as an expense. For the 6 months ended June 2025, stock-based compensation expenses were over $680,000. This is a non-cash expense, but it still impacts their overall financial picture and dilutes existing shareholders' ownership. Over time, all of these options is calculated using complex models, and the company is recognizing this as an expense. For the 6 months ended June 2025, stock-based compensation expenses were over $680,000. This is a non-cash expense, but it still impacts their overall financial picture and dilutes existing shareholders' ownership over time. This section details amounts owed to officers, specifically Dr. Myers and Ms. Carter. It looks like before the merger with Quoin Inc., their compensation was deferred and not paid out immediately. As of June 30, 2025, Quoin owed them about $1.5 million to Ms. Carter, most of which is classified as long-term debt to officers. They are making monthly payments to reduce this balance. This is a significant amount owed to key people within the company. This is where we see the nuts and bolts of their R&D spending. They've got agreements with Therapeutics Inc. for managing clinical studies of QRX03, and these are costing them millions. They also have research agreements with universities for developing new drugs, for example, their collaboration with universities for developing new drugs. For example, their collaboration with University College Cork for rapamycin formulations started in December 2024 and has already incurred about $120,000 in R&D expenses in the first half of 2025. It's clear their entire strategy hinges on these research and developing new drugs. For example, their collaboration with University College Cork for rapamycin formulations started in December 2024 and has already incurred about $120,000 in R&D expenses in the first half of 2025. It's clear their entire strategy hinges on these research and development efforts. Now let's talk about the risks. Beyond the usual biotech uncertainties, the report really emphasizes two critical risks. First, their reliance on Nasdaq for listing. As we discussed, they've had to do a reverse split to stay listed, and another misstep could lead to delisting. This would be a blow to their liquidity and ability to raise money. Second, and perhaps more importantly, is the risk of not being able to continue as a going concern. With those mounting losses and limited cash, they are really dependent on finding more money. If they can't, they might have to scale back or even stop operations. This is a big red flag for investors. This section reiterates the liquidity concerns. Despite the December 2024 financing that brought in about $6.8 million, they are burning through cash rapidly. The significant increase in R&D spending is driving this, and it's making their ability to operate for the next year uncertain without new funding. They are actively pursuing multiple avenues for capital, but the outcome is far from guaranteed. The cash flow summary shows the story clearly. They used $6.3 million in the first half of 2025 for operations, while investments provided $4.5 million. Financing cash flow was slightly negative after some warrant exercises and repayments. Overall, their cash pile has shrunk by almost $2 million in 6 months. Finally, the exhibits list the official documents supporting the report. They are filing certifications from their CEO and CFO, confirming they've reviewed the information, which is standard procedure. Overall, Quoin Pharmaceuticals is in a high-stakes game. Their Q2 2025 report shows a company actively pushing forward on research and development for rare diseases, which is the core of their strategy. However, this aggressive R&D spending comes at a significant cost, leading to substantially increased losses and a shrinking cash balance. The company is heavily reliant on future financing, and their Nasdaq listing is a constant concern that could complicate any future fundraising efforts. Looking at the numbers, Quoin is essentially betting big on QRX003. The massive jump in R&D spending indicates a high level of confidence, or at least a determined push, to get this drug to market. But the reality is they are burning through cash at an alarming rate, and the accumulated deficit and going concern warnings are very serious. It's a classic biotech startup situation where immense potential is weighed against substantial financial risk. They are not generating revenue, so every dollar spent is an investment in a future that is highly uncertain. What's my take? Quoin is playing a long game, and it is a risky one. Their direction is clear. Develop therapies for unmet needs. The weakness lies in their precarious financial position. While the R&D investment is necessary, the speed at which they are burning cash is a significant concern. The real opportunity is if QRX033 or their other pipeline candidates prove successful and gain regulatory approval. The risk, as clearly stated, is that they might not be able to fund operations long enough to see that through. What do you think about Quoin's strategy and their financials? Are they making the right bold moves, or is the risk too high? Let me know your thoughts in the comments below. If you found this deep dive helpful, give us a like, and don't forget to subscribe for more corporate breakdowns. And hey, if you want to join the conversation and get even more insights, hop into our Discord community. The link is in the description. Thanks for watching, and I'll see you in the next one.